Well, hello there, Maverick traders. This is Rob Reinhold, and look at that date, April 15th. It is tax day. Hopefully, everyone has their taxes done. I know everyone else dreads it, but I love it. And we were just talking about this last night. My wife's like, "What is wrong with you?" And I said, "Look, it's like your report card. You know, you finally get your report card of how well you did last year." And she's like, "I hated getting my report card. It was all C's and D's." And I'm like, "Oh, okay." Well, look, if you had a good year, you should be very happy about it. And if not, you've got some motivation to have a great year in 2025. So let's go ahead and get into it. We are less than 2 weeks away from our trading summit, and we've been meeting and doing all these cool things. Again, AI is coming, whether you want it or not in trading, it is here. We're going to show all of our traders how to integrate that into their trading. And yes, for those of you Maverick traders who won't be able to make it, yes, we will have videos and classes for you going over this exact same stuff. All right, let's jump into the markets here. The market was a really boring day today. Today was a really boring flat day, and we traded in a very narrow range. Not a lot of news happened. The markets were mellow. People are still worried about the tariffs. We haven't heard any new tariffs that were put on or taken off. And we also got first quarter earnings began. We heard from Johnson & Johnson, decent earnings. Bank of America City, decent earnings. They all jumped up and then sold off a bit. But all of these were barely positive today. So it's starting out, the market is a little bit more optimistic. And again, it's showing up in the activity here. Dow down a little bit, S&P down a little bit. Qs were flat. Russell actually outperforming for the first time in a long time. Oil is just sitting there in the low 60s. And gold continues to crank. Gold continues to be a really good driver here. And if we take a look at the chart here, take a look at the candles we've seen the last few days. And again, this is where huge volatility, huge candles, huge volume. And we always say that, look, the market is like a sprinter. When it has these sprints, you can't go past a certain point. Like, if you've ever done a 100-yard dash, at the end of the 100-yard dash, you're done. You need to stop and take a break before you can run again. And that's really how these markets work. We have these waves, and I love this analogy of surfing. You know, the waves come in, and then they recede, and there's a lull. And then the waves come in again, and then they recede. And sometimes waves are bigger than others, and then some days you go out there and there's not very big waves. It's exactly how the market is. And we just had a really huge tsunami come through. And right now, we're just in a lull. We take a look at the technicals, though. We're still bearish. We've got some major resistance up here at 5,500. We've got moving averages that are still moving lower. So, but we're definitely not seeing intense selling whatsoever. And one of the things I talked about last weekend in the trading room was the bond market. And I said, hey, if the bond market goes any higher, it's going to have a real problem with the stock market. And you can see for the last 2 days, we've drifted down into the 430s, really right into the middle of this range here. So the bond market being mellow is definitely helping stocks. That being said, you don't see this huge run into stocks right now. People are being cautious. People are being wary and people are being cautious. I don't see that changing anytime this week. We're not supposed to get any new news on tariffs this week. We're in a holiday shortened week. I see this week is really just kind of sitting where it is. So we're already up a little bit for the week. I see this probably being a slight up week by the end of it, but it's all within the context of a -2 market. So it's telling me you don't want to be overly bearish here. I don't think there's any reason to think that we're going to have a big spike down here over the next couple days. I just don't think that's in the cards here. But is there any reason to think that we're going into a new bull market? Absolutely not. So I think to be reasonable where we are, just we're still mildly bearish, but we don't think we're going to get all that much bearish moves here in the next couple of days. We do have earnings on Thursday with Netflix that I think might be the first thing. But again, the market's closed Friday, so we're going to have a 3-day weekend to stew on those news. I want to focus on the potential bullish trades that I found because the first one I found was Palantir. Now, Palantir is a very high volatility, high beta name that has been a darling for people, which I don't care about darling stocks. I don't care. But it came up on my scan as, hey, a bullish trade. In this environment, I don't really want to trade it. And I've got the chart here. And the chart looks great. It actually held up really well compared to the rest of the market. And here we are. We're pushing out of this resistance area. I mean, once we get out of this 100, I mean, this is back into the 105, 110 range, technically speaking. I don't think it gets there very quickly, but it's looking good. So I don't hate this trade, but here's what I hate about this trade. It's a high volatile trade that will get hit with any news. Any news will hit this one. So then as I was building this little watch list, everything else I came across, I want to trade more. Every single one of these names I think is a better trade. And I always tell people, look, when the markets are really volatile, you can drop down in volatility. So let's say the market's too crazy for me. Well, look, go trade T-Mobile. Actually, T-Mobile's still pretty volatile. Go trade AT&T. Go trade Philip Morris. And those were the names that came up. So again, Palantir came up and I was like, I don't want to trade that. But then I get like Budweiser. I get like Kroger. I get Philip Morris. And it's like, yes, these are the bullish trades I want to take right now. So yes, this looks good. Yes, I think if you are that personality that would much rather be in a Palantir, but you know what? I'd much rather be in a Budweiser. And I'd rather be drinking a Budweiser. Here's a stock that has held on through all of the tariff stuff, all the things. So if tariff news comes out on this, I'm not worried about it. If tariff news comes out, Palantir is down another 10, 15, 20%. This one, I don't have to worry about it as much. And it's probably more likely to go higher as well. I like this one way more. So I think at this point on your longs, you want to drop down on volatility, go to the boring stuff. You're going to feel a lot better being long, boring stuff here because the markets, looks like we put in a decent short-term bottom at least. I don't know if we have the juice to go higher here, but I think that stocks like this can crawl higher. So look, a 62, 64 vertical spread. You could do a 63, 64. You could do a 63, 65. Look, there is a lot of resistance up here. I understand that. If you say, hey, Rob, what about a 62, 63? You probably pay 70 cents to make 30 cents. If that's not your game, then maybe Budweiser isn't for you. I don't like long trades on high volatile names right here. I just don't like it. But I love these kind of trades. And take a look at this list here. We got AT&T, we've got Kroger, we got Sabra Healthcare, Philip Morris, CME Group, CVS. I mean, there's plenty of these low volatility, boring trades that we can actually make. Now, if we come over here to the bearish ones, I actually found some really good bearish ones as well. And I'm really looking for stuff that hasn't bounced. And here is one, Elf Beauty, ELF is the ticker symbol. Low basing here. We just can't get any buying whatsoever on this name. The only question is, when does it break? Does it go sideways for another 2 weeks before it breaks? This is where I just love a bear call spread or a bear put spread if you want, like a 50-55. And you go out for 2 weeks and you're going to get probably about $2.30, maybe $2.40 on a credit on this one. So you're basically at 50-50, 1-to-1 risk to reward. And you just let it sit out there for 2 weeks. Doesn't look like this one wants to go up. And if it drops and falls anytime during those 2 weeks, you've got a nice max gain trade on with limited risk. Again, lots of good shorts out there as well. But ultimately, I don't think the markets are going to do anything for the rest of the week. I think if you're looking for movement this week, I think you're going to be disappointed. It might come next week when we get more into the thick of earnings season. But for the last of this week, I think it's going to be pretty boring. We have retail sales tomorrow, estimated at plus 0.3. I think this report likely holds up. I haven't seen really, people are spending less, but not dramatically less. I think this number is a good enough number to soothe the market. We'll see. We'll see what happens here. And then we've got some more earnings. ASML is a chip company that is really the first chip company that's going to be reporting. So If you are in semiconductors, that's something you want to pay attention to. Other than that, I really think this is going to be a mellow week. For the rest of the week, we're going to go into a Good Friday weekend with the market close on Friday, with Netflix earnings after the bell on Thursday. Yeah, Monday's going to be pretty exciting. But until then, I think it's going to be a pretty boring holiday week. Goodbye, everybody.